Get you another expert view on the state of play for this upcoming Fed decision. Robert Heller is here. He's former Federal Reserve Governor. So thank you so much for your time. We appreciate you being here. And look, I want your take on what you've just heard there. We've seen the CPI print. What do you think it means for the soft landing scenario in the United States and ultimately the timeline on rate cuts?
Well, right now the economic situation is pretty good, as Lael Brainerd pointed out. However, monetary policy is very tight. The money supply is actually shrinking in the country. We have an inverted yield curve, which tends to be a harbinger of a recession. And we have pretty high real interest rates once you adjust the interest rates for inflationary pressures. So all that means that there is a constrictionary force, and the Federal Reserve is really stepping on the brake pedal, and we should see the results of that sometime next year. Hopefully just in inflation, but also it will probably happen in economic growth.
So, Robert, if you were in charge of the Federal Reserve today, what would you do here? Would you hike rates, would you hold, or would you cut in order to address some of the concerns that you're talking about?
At the moment, I would hold it. Hold it until you really see a slowdown in the economy and really you see a winning of the fight against inflation, which has been so hard to accomplish.
Inflation has come down, though. That's why we're seeing markets so aggressively start to price cuts into next year. How hard will Chair Powell have to push back on that current market narrative? It's something he has done before. Will he have to push even harder to perhaps take some of the excitement out of the equity markets here, which are all expecting cuts to come?
Well, let's not forget, Congress actually told the Federal Reserve to provide stable prices. Now, what does the word stable mean? In my mind, it means no inflation. The Federal Reserve, the current membership, interprets it as 2% inflation. That means price stability in their minds. I think the Federal Reserve should go further and really get inflation eliminated rather than being happy with 2%.
So just to go back to this cut narrative, how soon should we expect cuts to come then? If the market is perhaps getting a little ahead of itself here, when will the cuts actually take place?
Well, I think the Federal Reserve will start cutting in late spring of next year, roughly there. I would hold it for longer, but, you know, you asked the question before the House is, what will the Federal Reserve do? What are they likely to do? And there my answer is late spring, they will cut.
Okay. You know, Robert, one of the other interesting things you and I have spoken about before is this enormous fiscal deficit in the United States, of course, against the backdrop of tighter monetary policy and the growing concern in the Congress and on the ground in the US about the interest rate payments that are required as a result. Are you concerned about the US long-term fiscal sustainability positioning right now?
Absolutely. The current situation is unsustainable. The federal government is spending money hand over fist, and we have already a debt to GDP ratio of 120% in this country. That is the level at which Greece went broke a couple of years ago. We cannot continue on the path of spending more and more money. And just in the last session, you saw, in that segment, you saw, you know, there are people, again, lobbying for more aid for Ukraine, more aid for Israel. These are all worthwhile things, but you cannot afford them at the present time. It's time for the Europeans to stand up and do their part of the share, supporting these foreign policy causes.
So you think that maybe the US is doing a little bit too much here when it comes to supporting these foreign wars? Is that what you're saying?
Well, not that we don't want to support them. I'm for supporting the wars, but we just don't have the fiscal power to do so. We're digging ourselves into a deeper and deeper hole, and it's just unsustainable. It will result in the eventual, I don't want to say bankruptcy, but fiscal problems for the country that will be very, very severe unless we stop this spending spree.
All right, fascinating. Robert, we appreciate your time. Thank you for sharing your insights and your analysis with us. I'm looking forward to our next conversation, probably likely in 2024, Robert, so you enjoy your new year as well. Robert Heller there, the former Federal Reserve Governor.